Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is June 26, 2012. Lots to talk about, so let's get started. This here is a chart of the SPY, which is the ETF that tracks the S&P 500. All right, let's just do a little bit of a history here. We had this, this descending wedge pattern, just kind of big descending wedge pattern created on the SPY. We actually broke through it. We consolidated. This is something that we talked about in previous videos. We actually broke up above and closed above this 50 moving average, but we did not get a confirmation close above that candle. We did go right into this 135.44 level, which is what I've been waiting for, and then I shorted right around here. I didn't get to short it right exactly at the top, but I shorted it right here. And then the very next day, she went down and then recovered right above this 135.44 level, which shows significance on this mathematically calculated level. And then obviously everybody knows this huge down day, which put me in a pretty good position. At this time, I took half off the table, which means I sold half my I covered half my positions, and I put a break-even stop on the rest. Okay, and then the next day, we had a small little bounce, and I said, okay, so after this big down move, we'll probably get a bounce. Normally, it's at least a 3-day bounce. You have this day and then maybe 2 other days before we come down again. However, it turned out to just be a single day consolidation period, which is this one day before we came down, which was yesterday. Now today we made a small bounce. I discussed this in yesterday's video that I was hoping that we would get down into this 200 moving average, but there is a possibility because we had such a big move down. I mean, we went from all the way up here to all the way down here, that we would get a bounce. Now similarly to this, you have a big down move, you get a bounce, right? Same thing. You get a big down move, essentially it's all the way up there, all the way to down here, you'll get a small bounce. Now whether or not we continue to consolidate sideways before we come down into this 200 moving average is the question. The markets to me are still weak. We did pierce this 20 moving average here. However, we could not close above that 20 moving average. Okay, so that's a big sign for me. Some say that because it was able to go past the 20 moving average, that it does show some strength. But at the same time, I'm saying that I would call this more of a neutral move, simply because yeah, it did pierce through the 20 moving average, but it was unable to close above it, which shows me that there is possible weakness in today's trading. Now, keep in mind today, we had a 141 million shares traded today. That's very, very low volume. And like I always discuss in previous videos, when you have low volume like this, it gives the institutions a chance to prop the markets higher. And that's basically what we're seeing today. Low volume, you have to give the markets an upside bias. It doesn't happen all the time, but it happens more than not. Okay, so more like maybe a 70 to 50, 70 to 40. I'm sorry, 70 to 30 or 60 to 40 chance that it will have an upside bias on lower volume. Okay. So here's the thing. What's going to happen for the rest of the week? Well, I don't know for sure because I'm not psychic, but I can tell you what I'm seeing in the charts. Whether or not it's true is the real question. Okay. Basically, what I see is this huge down move. I mean, if you just look at this as a single down move here, we could potentially trade sideways until the end of the week, or a little bit more into next week, simply because next week is the holiday season. Holiday season is low volume. Today was low volume, so can I validate this move higher on this volume here? Absolutely not. This volume was so low. I mean, it was, I would say, a little bit higher than Wednesday's volume here, or Thursday's volume, but so that's basically this volume right here. So a little bit higher, but definitely does not qualify this or quantify this move here or validate this move here. So there is a potential that we may come down, we may consolidate for 3 days or so, and before we come down into this 200 moving average, or like this 1-day consolidation that we had previously, we could come down again because we had another big move. We consolidate for a single day, which was today, before we hit the 200 moving average. That is definitely a possibility. I do know this. As a chess player, like I said, you have to plan your moves, right? So here we have gap window. Okay, here we have the 200 moving average. Here we have a pivot point right here, which is significant in my opinion. We have a gap fill, which is pretty significant in my opinion as well. Let me scroll back to see if there's anything else back there. And we also have another pivot here, and a breakout point here. So this is going to be pretty a fairly powerful support line. So in my opinion, I would probably take the rest of my my short positions off the table at this 200 moving average. I mean, and then just wait for a bounce or look for stocks to bounce, and I'll show you that in a little bit. Just 130.01. This is just an alert, so please ignore that. But yeah, so we're gonna have a bunch of support here. If we have a down move and we break through this thing, or we gap below, I would say if we gap below this line right here, somehow, some way we gap below that tomorrow. Actually, if we it would be actually very nice if we got below this gap window here, which is probably at this Fibonacci 382 level. Then I'm thinking that we're going to go all the way down here. I mean, believe it or not, I do have a mathematically calculated level here, which is at 125.66. This is definitely just a calculation, but it's been working just like this 135.44. It's actually the exact same calculation. So there is a potential. Right now the charts aren't telling me that, but there's definitely a potential that we could hit this 125.66. If we do, and we have a lot of technical damage, meaning we gap down over here tomorrow, then I will not sell the rest of my positions just yet, and I'll probably wait for either a double bottom or this 125.66. It's going to have to be a pretty disastrous down move. I mean, the down move would have to be pretty significant, the same move as this that happened on Thursday. So let me see if so yeah, there's definite possibility. I've never seen the SPY gap that down, gap that low before, but anything is possible. So right now, I'm gonna have to say that this could be a one-day consolidation, but I would give it three before the expectation is to the 200 moving average. So that'll be my guess for what happens tomorrow and the following week. We could just get this one-day consolidation like we did on Friday, and then boom, just come right down into 200 moving average. Basically, right now, I do not think this thing is going to go higher. However, that's why I do have a in the money stop, meaning if this thing does go higher, essentially, I believe if it goes about this high here, I get stopped out with a profit, okay, and then I'll just let this market do what it needs to do. But I think, to be honest, if we close above this candle up here, then this whole area here is negated, and we'll probably head higher back to this 135.44. In my opinion, we are gonna obviously get some resistance in this 50 moving average, but I don't think it's gonna be significant. Okay, so that's SPY. Alright, this is a chart of the UUP. I normally talk about the DX, but the UUP seems to be the charting. Technicals seem to be a little bit more accurate on the UUP as of, just for now at least. So previously I said we had this pivot point, we have this 50 moving average here, which is constituted a bounce there, and then we had this 20 moving average, and I said in last night's video that if this 20 moving average holds, and it obviously did, we're going to get a pullback, and that's actually what we had today is this pullback. Now obviously in the pullback it's opposite from the market, so dollar up, market down, and vice versa. So this is why I said yesterday that we could potentially have a small bounce today, or a dead cat bounce of sorts, because the dollar just pulled back, and if the dollar continues pulling back, then we'll continue to see upside in the market for tomorrow. Okay, so keep your eye on the dollar. Alright, this is a chart of the GLD, which is the ETF that tracks gold. Alright, so let me kind of just zoom in over here. Let me take this, well, let me see, just real quick while I make this video. I know I'm eating up time by doing this. I should have done this earlier. Alright, so we're pretty close to that. I mean, we are at the gap fill level here. So we did get a bounce. Okay, so that's substantial. What I'm seeing right now in this chart is, it looks like we're just consolidating sideways. If these two moving averages can come together somehow just like that into price, then I would probably consider shorting gold. If it comes up all the way over here and these two moving averages comes together, and then I would consider shorting gold at least into this double bottom period here, and then potentially in this 146.82 level. Now if I miss this trade, then I'll wait for the 146.82 level before I attempt to take a long trade on the GLD. So that's what I'm seeing on the charts right now on the GLD. Alright, this is a daily chart of Apple. I was currently short Apple since yesterday because of this breakdown of this two moving averages, the close below the two moving averages. Normally you would have to wait for a confirmation close below that one. However, I did not wait, and then what happened was, let me kind of just zoom in here. Oh, that's kind of a bit of a zoom. Let me just readjust this here real quick. Let's bring this down. Alright, it's kind of big. There we go. That's a little bit easier to understand, I believe. In any case, just take a quick look at Apple. What happened? We broke down. We didn't confirm below. So what happened? We created this doji type candle, but it's still under the two moving averages. You see that? And I'm not going to stop out just yet until it closes back into this upper wedge pattern, or ascending flag pattern here. Okay, so as long as right now it's still showing me some weakness. We did have the substantial down move here. We created this doji candle, so there's a potential we may get a pop into this 581 level. That's a definitely a possibility if the markets are showing some strength. But the markets popped today, and Apple only got a bit of $1.26. So right now, Apple to me is in relative weakness, at least in the short term. Tomorrow could be a different story, but this is what the charts are telling me right now. I did say in yesterday's video that we're gonna get some support here, and that's exactly what happened. It kind of worked out too well for me, simply because I didn't want to see it do it that way. I wanted it to actually come down to this gap fill here, or at least to this double bottom position here. That's what I wanted to see today, but obviously it did what the charts told me, and that was it was going to get nice support around this level here. It's one of those things. If you hope in the right direction, then it's okay to hope, as long as you have a plan. And my plan right now is we didn't get a close above these two moving averages, so we're still in relative weakness on Apple. So I'm still holding on to my shorts on that. $1.26 up is really nothing on a $600 stock. Okay. All right, this is a daily chart of QCOM. All right, I kind of like this chart, so I wanted to bring it to your guys' attention. I have this mathematically calculated level here at 55.62. I also have these couple pivot points right around here, which looks pretty good to me in my opinion. We also have a Fibonacci 50% level here, okay, which is also pretty good. And I believe that's it. But you know what? If the markets kind of get weaker and QCOM comes into this level, say by Friday, and because I would have an upside bias simply because of the low volume that could potentially happen next week because of 4th of July, then I would actually take a trade at 51.62 to the upside. Again, this would be a counter trend trade, so I would be in and out as soon as possible, but this is something to watch. This is something that I'm watching is QCOM. Obviously, everything I'm about to show you and what I previously showed you is just my opinion and nothing more. This is not a recommendation to do anything. I'm just explaining to you what I see in the charts and what may potentially happen. Alright, so I do have this calculated level. If you looked at the previous videos that I made, I don't know, maybe 4 or 5 videos ago, I had this 82.59 level on EOG. I just wanted to show it to you guys. We went right into this 82.59. In fact, the low was 82.48. Alright, so I was a few cents off, and then we got this pullback intraday. All right, so that's pretty good. EOG could actually catch a bid because of this 82.59. It pretty much already did catch a bid, to be honest, but it could go higher tomorrow. So that's something to think about. We did get higher volume, but I would like to see it higher, at least for the last 3 days. We didn't get that. We got higher volume in the last 2 days, but we still got some higher volume. So I wouldn't say to jump on, or I wouldn't jump on a long position on EOG if I had caught this during the intraday, which I didn't. Unfortunately, I didn't have an alert for this because I took the alert off, I guess. I was unable to jump in on this trade, but I just wanted to see, or wanted to show you how these mathematically calculations can work pretty good at times. We also had this 96.37 level, which held up pretty well. It never got to this 101.09 level, so I should actually take that off. But I've never recently talked about EOG. It was just something that fell off my charts, off my watch list, and then I stumbled onto it today, and I was like, oh darn, I missed it. Anyways, I just wanted to show you that in case you are already long in EOG. It looks like that we may get a possible bounce off of it. If not, we already did get an intraday bounce. So if we continue down tomorrow, it doesn't matter. This 82.59 still held. Okay. Another chart I really liked was the USO. The USO was at a nice double bottom here. Let me just zoom out as much as I possibly can here. So see if I can get 20 years out of this. And if you notice here, this is a pretty substantial double bottom in my opinion. This was the low of the year 2011. So in my opinion, this is a pretty good support line here. If it could actually have gotten down to this line, it would have been a lot better. But there's a potential that the USO or oil could get at least into this 20 moving average as the 20 moving average comes down. Now here's the question: it's such a strong, substantial double bottom in my opinion, because the next double bottom would be the low of the year, the second low of the year 2009. Okay, and then of course the last double bottom would be the very low of 2009, which would be the lowest in my opinion since that far back. So this is a pretty substantial double bottom. I'm not sure why USO isn't catching a better bid, but right now unfortunately I cannot go long USO simply because again, what is it really doing? I mean, if you take a look at it, it's coming down, And then now we have these three candles, and I've just talked about this about 5 minutes ago. You have a down move, and then now you have three candles here. There's a potential. I wouldn't say that it's gonna happen, but there's a potential that we could, and it's forming some sort of bearish pattern. Now, normally when I explain in my videos that if it doesn't actually tag my level and it consolidates before it, then it's building power to actually punch through this level. So right now it didn't exactly touch the level. You could make a case that some people normally get the candle at the open, and then yeah, then that would work. But if you take the level at the tail end of the candle, it's consolidating before it's actually tagging it. See, so it's coming up consolidating, and then it may have enough power to break down. Now if the 20 moving average comes down and then USO comes in and trades into this 20 moving average, and that's when I believe that the USO could potentially come down. Now here's the question: when we fall into the 4th of July low volume area, will USO catch the bid? Right? That'd be the question. In addition to that, if this this bearish pattern is off of this very downward momentum here, so these bearish consolidation patterns sometimes don't work as well. Definitely does not work as well after a big down move has already happened, which is what it's happening now. So, and another rule of thumb is if a pattern does not work out, then the opposite move is normally a pretty substantial big move. So, your levels would be around here and over here, possibly into this 50 moving average, or even in this gap window here if the 50 moving average can come down in there. That could potentially right here be your price target for USO. I haven't done any mathematically calculated levels on the USO. Let me see. Oh no, I actually did. So 29.79 looked like the mathematically calculated level, and then we had a 3160. The USO doesn't look like it likes these mathematically calculated levels as perfect as the other stocks, but it does look like it's holding up. It's 29.81 right now, so it is above this 29.79 level. So there's a potential that USO could get somewhat of a bid into this 20 moving average before it comes down, and that's just my opinion on USO. Alright, this is a daily chart of COG. What I really like about COG, in my opinion, don't pay attention to this 35, 38, 35. That's just my alert. Just gotta make sure I got these alerts in so I don't miss these trades. And to be honest, again, like I mentioned in previous videos, if you trade a stock that's in relative strength, like Apple, okay, COG is above all its moving averages here. It's in pretty good strength. I mean, it's in a confirmed uptrend. You have a high, we have a higher high, we have a low and a higher low, etc. I have a calculated level at 38.45. We have a Fibonacci 618, which is the strongest level in my opinion on the Fibonacci's retracement levels, which is at 38.78. And then we also have this double top position here, so there's going to be a pretty good resistance around this area here. If it hits 38.45, I'll probably take a short position. Again, it'll be difficult to do simply because we are going to go into the holiday week. So, to be honest, I may hesitate taking this. If at the end of next week we get into this level, say we, I don't know. Yeah, you know what? I probably won't take this trade simply because, yeah, next week is going to be low volume. I would have to wait. It's a pretty good level in my opinion, but you know what? Let me make I may have to make another calculated level, and maybe I'll have to wait till this, if anything, because going short right now might be a risky thing to do. But you know what? Intraday, I'll be very tempted to take this at least a double top on the intraday. So for you intraday traders, that might be something to take a look at. But on the swing side, I wouldn't take any short positions until the holiday season is over or holiday week is over. But I do like this chart. Okay, so this is something that I want to keep my eye on. Last but not least, the famous Walmart, the beast of all beasts. The one stock that doesn't care about if the markets are going down because it's going to refuse and continue to go higher. I still don't see any substantial volume spike or anything like that. We did get a move up of 40 cents. It did make a new high today, which is good. We didn't close at a new high, but we did get a new high. I still think the $70.56 level is substantial. I mean, it could get there. It could actually get into the 72 level here. I believe there's history showing that level there. If I can just zoom back all the way possible, this will be the last one. So let me just see if I can just do the weekly here. Yeah, so this line here, that's a pretty good line here. Was $70.42. Yeah, so $70.56. Yeah, definitely. I'll probably take a trade a short trade on that. Again, and that's provided Walmart gets here on Friday next week. Friday next week, we get into this level. I'll take the short. What is this? The weekly? Yeah. So Friday. Oop. Friday next week, if it reaches this level, then I'll really consider taking the short because that'll be after, and it's gonna take some time for it to get there, possibly. And if it takes its time getting there, then I'll definitely take a risk and short Walmart with a small position. Again, shorting a beast is not an easy thing to do, but it's definitely possible. But you know, the trend will be in my favor. You go with the trend, and right now the trend is still down. Okay, so that's the 7 minute market update. Thank you very much for watching. God bless you all. Good luck in your trading tomorrow and your trading career. And I hope to see you in the next video.